Data out this morning suggesting that Japan may be far from an economic rebound despite all the positive talk that still abounds. David Tweed in Tokyo with more on that. That CPI number came in kind of crashing and burning earlier today. David, what's the reaction in the markets been?
Yeah, Bernie, that's 3 months of declines we've seen now. The risk is that we're going to get entrenched deflation, and with a record drop, it looks a bit scary. 1.1%, but remember, a lot of that drop was in the oil price. It was only in last July that the oil price was trading at $140 a barrel. Now it's at $70, so that's at half the level. And if you exclude the impact of the oil price on the drop, you'll find that prices only came down by about 0.5%. Still, that's pretty grim. And as Azusa Kato, who's an economist at BNP Paribas here in Tokyo, said, with demand deteriorating, companies are finding it more difficult to sell goods and services, and that's turning into discounting. And that's what we're seeing. Aeon, Japan's second largest retailer this week, it started a discount campaign limited to confectionery drinks and mayonnaise. But the risk is that consumers start to delay purchases of big-ticket items. Companies don't book those sales. They need to cut costs. That puts pressure on wages, and that means less money for consumer spending. And remember, consumer spending is the biggest part of the economy, Bernie.
Elsewhere, if you would tell me so much, what exactly is the effect in the markets today, if you will?
Well, look, I mean, first of all, before looking at the markets, the question is pretty much what the Bank of Japan can do about it. The Bank of Japan cut its interest rate back to 0.1% in December, and it's been buying corporate debt, and it's also increased its government bond purchases. Now, that's to keep credit flowing to companies. One thing that the OECD said just in its report this week was it reckons that the Bank of Japan should keep on pumping money into the economy until underlying inflation is firmly positive. In fact, the OECD said that the bank should communicate better its intention to keep that interest rate at that 0.1% beyond next year, Bernie.